How would you feel if you never had to pay income taxes again? In fact, how would you feel if you never had to deal with the IRS ever again? It sounds pretty appealing, right? And the reason why I'm bringing this up is because the current Trump administration has floated the idea of doing just that. In fact, Trump has gone on record saying that maybe we could replace taxes with tariffs. Now, this isn't really possible, and I'll give you the exact numbers as well as the reasons why here in a second, but another option that has been floated is replacing taxes with a consumption tax, which is very similar to a sales tax. Now, this is theoretically possible, and as the title of this video suggests, it would take about 24.4% consumption tax to completely cover the current federal tax revenue. Now, before you go jumping with joy and screaming that this is a fantastic idea, let's actually go through the numbers. Because what matters most for you, and of course for me, is keeping as much money in our pockets as possible. Nobody really likes taxes. And nobody really likes taxes when we feel like those taxes are being wasted. So, could we, and would it benefit us if we replace not just income taxes, but every single federal tax that we pay as individuals? That is what we're going to answer in this video, and we're going to do so by going over the data. So, as always, my name is Derek, and I got my degree in finance, so you don't have to. Let's break this down. So, the two main ways that have been proposed to do this is either tariffs, a consumption tax, or a mix of both. Let's go over tariffs first, because it's not quite possible to do it with tariffs alone. So in order to understand why, we have to know how much tax revenue the federal government generates. And for the fiscal year of 2024, that number was $4.92 trillion. And this is across all revenue sources. So that means income taxes, that means corporate taxes, that means Social Security, that means Medicare. That's everything. And that is the tax revenue base that we would need to attempt to cover if we want to be in the exact same position. So now let's go over the numbers in regards to tariffs. And the first one of those numbers is how much we import, because that is what would be tariffed. So the United States imports about $4 trillion worth of goods into the country. That is a very large number. But remember, tariffs are going to be a percentage of that. And that's really where the tariff argument starts to fall apart. Even in an impossible scenario of placing a 100% tariff on every single imported good, which, by the way, would most likely absolutely decimate the economy, even in that scenario, the federal government would generate $4 trillion. This is about 0.92 trillion short of what is currently generated, and it is close to $3 trillion short to the federal budget, which is pushing $7 trillion, which is where we get that budget deficit of around $2 trillion. And even in a best case scenario where DOGE, the Department of Governmental Efficiency, is able to cut its target of $2 trillion, which, by the way, Elon Musk has already walked back and said that a more reasonable goal would be to cut $1 trillion, well, even in that scenario, the federal budget would be either $5 trillion in a best case scenario or $6 trillion in a more likely scenario. So even with a 100% tariff, we would be $2 trillion short. And even with a much more reasonable tariff of 25%, which, by the way, is still bordering on impossible to implement without destroying the economy, that would only be around $1 trillion in tax revenue, which means tariffs alone will not cover the current tax revenue base, and even with major government spending cuts, will not cover the budget. Which brings me to the main topic of this video, a consumption tax, because this is hypothetically possible while still covering our entire tax base. In order to cover everything, Social Security, Medicare, corporate taxes, income taxes, every federal tax, it would require a consumption tax of 24.4%. this is based on the PCE, which is the personal consumption expenditures, which basically tracks how much the United States spends every single year. That number for the most recent year is about $20 trillion. So if we need to cover 4.92 trillion of our tax revenue, that equates to roughly 24.4%. Now again, before you jump with joy and say that this is a fantastic idea, we have to figure out how much this will actually cost you as well as the average person to see if you're actually better off or worse off. And foreshadowing, there is a group of people that will be better off. There's also a group of people that will be worse off. And I've done the numbers. And an assumption in regards to the math that I did is that we are doing this for the individual. That means the individual's average personal consumption expenditure and the individual median income for this country. So with those assumptions in mind, let's figure out who this will benefit and who it will probably hurt. And in order to do this, we first need to know the average PCE per person, because under a consumption tax, that is the number that will be taxed at 24.4%. On average, I know some people spend more, some people spend less, but the average personal consumption expenditure for an individual person is right around $59,000, which means the average person taxed at 24.4% would spend roughly $14,500 in taxes under a pure consumption tax system. Now, remember, when we're talking about a consumption tax on PCE, that means a tax on things like rent and groceries. But across the board, on average, this would equal a $14,500 tax burden for the person spending the average PCE. But one more thing, this is before any sort of rebate. These proposals are usually accompanied with what's known as a prebate, which is basically a monthly amount that the government would give every single American to counter the taxes on essentials like groceries. And we will talk about that here in a second. But before we do that, let's figure out generally who this system would hurt and who this system would help based on income. So as plain and simple as possible, comparing this to the current system, this new consumption tax-based system would benefit anyone earning $60,000 and above. Why? Well, because somebody making $60,000 has roughly a $13,500 tax burden in the current system, which is slightly less than the $14,500 tax burden they would have in the new system, assuming they spend the average PCE of roughly $59,000. And yes, I know the counter argument to that is that some people making $60,000 a year don't spend anywhere near the PCE. And that is absolutely true. But there is also plenty of evidence and surveys that suggest that the majority of Americans are, in fact, living paycheck to paycheck. But again, in this scenario, $60,000 is roughly the net neutral cutoff, where you wouldn't benefit or you wouldn't really be hurt in either system. As an individual income moves above that amount, well, then you start to benefit more and more from a consumption-based tax system. For example, somebody making $70,000 a year has a tax burden closer to $15,800. They would benefit when compared to the $14,500. And this, of course, only improves the more money you make. And it vastly improves as you surpass the $100,000 per year mark. But again, remember, this is before we talk about a potential monthly rebate, usually up to the poverty line that is meant to cover taxes on necessities. Before we get there though, it is obvious that this type of consumption tax system benefits you the more money you make. This is why it has sometimes been called a regressive tax system, meaning it impacts lower income earners more and negatively. I'm not saying it's a bad system. I'm just saying that this system does benefit you the more money you make. And that's simply because the less money you make, the more you're probably spending of your paycheck anyways, which means you're getting taxed on the entire amount. If you say make $100,000 and only spend half of that, you have basically $50,000 of untaxed income that you can then invest or buy real estate with. Okay, but what about a government rebate? In these proposals, which there have been many, but the most recent is HR 25, currently proposed in January in Congress, most of these proposals have some sort of rebate, which is meant to cover necessities up to the poverty line. And most of these proposals give that rebate to every single American, which means in 2024, the poverty line was about $15,000 for an individual. In a system like this, you would also get a 24.4% rebate on those $15,000, which means every individual would get a yearly rebate of about $3,600. Now this changes two main things. One, it lowers the income level required for this to benefit the average person, but it also increases the required consumption tax percentage to cover this new expenditure for the government. When this rebate is included, the new tax burden under this system would be roughly $10,800. This significantly lowers the income required to benefit from this system. And in this scenario, anyone earning above roughly $50,000 starts to see some benefit because the tax burden under the current system is roughly around $11,000. This is better and more fair for more Americans, but it also does something else. In order to cover that same current $4.92 trillion in federal tax revenue, because of this new monthly expense for the government, the consumption tax would have to be increased to over 30%, which of course then raises the required income in order to benefit from this system. So it becomes this balancing act where we would probably land around $55,000 as an individual in order to start benefiting from a consumption-based tax system.
Hey everyone, I just want to interject real quick because I just did the math and it's actually higher. In order to create equilibrium, which means the government still makes $4.92 trillion and has enough money to cover every single rebate for every American, the consumption tax rate would actually have to be 32.4%, which means the required income to benefit under this system is actually $63,400. That means if you made more than that, you would benefit. If you made less than that, you would not benefit. But this assumes that you are spending PCE of $59,000. If you spend way less, then you might benefit at a lower income.
But remember, that is on the average PCE. If you make $50,000 and you spend significantly less than that, say half, then your benefit under this proposed new system might actually be much better. And that is why we have a great debate over everything in this country, because what might benefit one person might not benefit another. Some people like this type of system because it feels like everyone, regardless of income level, pays into the tax system. But some might also say that this is a regressive tax system because it hurts lower income earners. And the more money you make, the more this benefits you. Because if you make, say, $1 million a year, and you only spend $100,000 of those dollars, you have $900,000 of untaxed income, which you can then invest to, again, accumulate more wealth. And one other thing we, of course, have to talk about is how this system encourages saving, not spending. And while for the average person, that's probably a good thing, for the economy, that's not so much a good thing because it can lower the small inflation that the economy requires to grow, and in a severe scenario, it might actually cause deflation, thus placing a drag on the economy. But then the other side of the argument is that the current tax system discourages working because the more you work, the more you're going to be taxed, which also places a drag on productivity and then the economy. So is this system fair or not? Well, I guess it depends on a couple main points. One is where you fall on the income ladder. And secondly is how much are you saving? If you are saving a significant portion of money, then this might actually work well for you. But if you are living paycheck to paycheck, like a huge portion of Americans are, then this might actually hurt you more because you're being taxed probably a higher percentage than you are currently on every single one of your dollars anyway. And what do I think? Well, personally, obviously, I'd like to pay less taxes. With that said, when I make these videos, I have to see it through the lens of the average American, because when policy decisions are being made, that's who matters. And in my opinion, because right now the average American is most likely living very close to, if not paycheck to paycheck, this system seems like it would be a net negative for most Americans. That doesn't mean you, that doesn't mean me, that just means the majority of Americans. And when you look at the median individual income in this country, it supports this. The median individual income is around $40,000, which is below the threshold required for people to benefit under this new consumption tax-based system. Now, of course, there's one other argument, and that is combining a tariff along with this system. But when we start to move into that territory, there is so many moving parts and so many variables, it's hard to determine how much tax revenue tariffs would bring in. And it's also hard to determine how much Trump and his administration will be able to cut from the budget, if any. Obviously, if a significant portion can be cut from the budget, then these numbers change drastically. But right now, currently, it kind of seems like $50,000 is that cutoff point. If you make more than $50,000, you'll likely benefit. And if you make less than $50,000, you likely will not benefit. But I guess all we can do is see what happens and continue debating in a healthy, productive way, because that is how good ideas get put forth, and that is how good change happens. So if you like personal finance, world economics, and investing broken down simply, you are in the right place. And with that said, I hope to see you in the next video, and I hope you have a fantastic rest of your day. Until then, take care.